Hey, good afternoon, guys. So this one's a subscribers only stream, right? I haven't done a stream for a while. There's kind of not much to say, and I think when everyone's just screaming bullish, 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 there's obviously nothing you're going to get through to anybody other than Bitcoin's going to the moon. So in the grand scheme of things, what I wanted to do was just put this together to just kind of curb any FOMO, just get kind of some logic kind of back into play and just explain what I'm seeing, right? So I know Paul will probably agree with a lot of what I'm going to say now. um it's just some logic for you, right? So whether you agree or not, whether it's a missed move, a once in a lifetime opportunity, let me explain as to why this isn't, right? And first things first, we had a chat back and forth last night in the crypto channel, so if you haven't seen that, it's worth going to have a little read through. On a personal level, I've been in Bitcoin an awful long time, right? So for me, missing any kind of move or not taking any kind of move, it's always going to be questionable to me personally based on purely the risk reward ratio, right? So I'm not going to look to buy at 15 when the price could drop down to 10. And I'm not looking to buy at 20 when the price could drop to 10 and potentially only go to 30, right? So as we see this kind of accumulation, what I actually put in the book and the way that I saw Bitcoin playing out kind of back then was we were early on in an accumulation, right? Now, we've obviously kind of rallied on it. Now, textbook for me would have been, 30, 32 range, almost at a maximum, right? So, although you'd anticipated running maybe 3 or 4K more with just hype, the hype was kind of hyper extended and gone, beyond that 35, 36, 38, 40 level. So things have changed a little bit, but they haven't really changed a lot, right? So as I said, on a personal level, I'm just not interested in Bitcoin as we stand, right? And it's not because of where we are or where we're not. I'm not going to short Bitcoin, right? I don't take these short term moves. I'm not looking for kind of counter trend type plays. And I think, in the grand scheme of things, Bitcoin does have a future, right? So where I am right now, I still hold a little bit. It's not a lot. It's nothing compared to what I was holding and selling off on the first rally up to the 65K high, right? But on the grand scheme of things, or in the grand scheme of things, it's just lack of interest for me, right? There's plenty of other ways to make easy money that's almost guaranteed in comparison to taking a punt on this, right? So first things first, let me just explain this, right? I'll come back to kind of taking the punt and some of the math and the logic in this, right? If we look at where we are on a monthly time frame, there's a couple of key things that I want to highlight in terms of where we are, right? So first things first, from this kind of low area, we had the first candle, which, if the next candle was a bit more aggressive in terms of the volume, the chances are this would have been a nice move, right? The reality is, if you look at the way that the move has actually gone up, we've technically gone A, B, C, right? Which at the moment is more likely to see, right? That we see an A, a B, followed by a C, which means we very likely see in some kind of 3-3-5 move. Right? Now, this is for me why I kind of don't like this the same in terms of the accumulation started. And the reason that I'm saying potentially being wrong now in terms of the book and what I've actually put out there for an accumulation to start is it could actually be worse than I would first like or first anticipate, right? And by that, I'm saying I don't think the downtrend is actually finished yet, right? Now, a lot of people would hear that. And if this was on YouTube, a lot of people would just click off and go like, oh, you're wrong. You don't know nothing. You don't. So in the grand scheme of things, right? The reason that I don't see, an uptrend kind of started yet is that we haven't had enough time in terms of large scale accumulation. We're not going to go to 250K plus, right, on this level of accumulation, right? So that's the first thing. We're talking about monthly cycles, annual cycles, right? Bigger moves, grand scheme of things. So for me, whereas I thought maybe we would get, the first move, potentially AR, back down ST, up, come down for an STB, carry on through, back down, right? And then ultimately either a spring or no spring event up. You probably have your last kind of point before you'd actually kind of go away and rally, right? That's the kind of move that I would have loved to have seen. This move isn't this move, right? And you can see that from space, right? It's just a million miles away. The reality is, if you start looking at things like, let's just put a fib extension on, I'll do this with the magnet tool. First things first, we come up, we come back down, right? Now, if you go in and look at anything Elliott extension wise, you'll actually see that the level that we've gone and tagged, right, is quite a big level, right? It's quite a big event, right? In the grand scheme of things. What tends to happen in these reversal moves is you get a 618 pullback, you get a 100% pullback, or you get a 127, 1236, right? And this is why I've got the two, the 1.27 and the 1.236. I've actually got them both in yellow on my chart, right? This is kind of like the optimal zone. You sometimes get it back to the green, right, which is the 1.382. But ultimately, in the grand scheme of things, anything above, this level is more likely to be pulled straight towards that 1.618, right? So there's nothing stopping us saying that, that's done or that isn't done. At the moment, I'm on a monthly time frame, right? So you probably have to look down on a weekly time frame and see if you can see any, 335s or 535 type moves, or any 335, 335. All that kind of bullshit for me, that's irrelevant, right? That doesn't matter one bit for me, right? So whatever you want to go and do and distill it down to, that's kind of on your back, right? So next thing for me, right, is if you look now where we are, right, we've tagged this kind of key level. I'm going to share something that I shared back, last week. The master levels in there, right? These master levels, if I come down, let's say on a daily time frame, you'll see this a little bit better, maybe even smaller, say a 4 hour time frame. What you'll see that actually happens, right, in these levels, these are all the master patterns from, back last year, all the way through this year. As we've come into each of these zones, right, and each of these levels, we've created, new foundations to be pulled, back to and from, right? So you probably see a 50% expansion move, right, move up. We've come back and technically tested the level. All we've done is moved into the next one. We've created another layer of interest, or another level of interest. Now, the reason that these are another levels or another layers is that clearly they were levels in the past, right? And clearly, as the price gets pulled towards them, price has gone kind of sideways towards, right? Which means there's still activity, right? Or a desire for activity in and around these zones, right? So as you can see, the price moving sideways, all we'll be doing is creating kind of new master pattern levels, right, in the future, right? So again, for me, what I'm seeing with something like this is look at the sheer size of liquidity sat in there, right? That isn't an accumulation pattern, right? There's no pattern at all. You're going to be, struggling to find any kind of real intel in that, right? The only intel you're going to have is that we've gone up on a monthly time frame, we've gone up on a weekly time frame, and we've gone up with kind of zero volume, right? Now, obviously, the BlackRock news come out. It turned out to be fake, but the market has kind of rallied anyway. So there's two things I want you to take from that, right? There's two things I want you to really give some thought to, right? First things first. Let's just assume that BlackRock now gets approved in January, right? And ultimately the price has been priced in, which means this rally was fake to some degree, but it's actually happened. And now the BlackRock kind of price, in terms of what the expectations of the price rally would do, has already happened, right? That's the first thing. The second thing is BlackRock doesn't get an approval in January, and that gets set back again 3 months, 6 months, etc., etc. And retail start to panic because we're now underneath the levels they assumed we would have been at by Christmas. Loads of people were calling 100k by Christmas, etc., etc., with no real logic, as I've said for the last 18 months, as to supporting a bullish move. Right now, again, going back to what I said at the start, this for me, right, is it's a personal thing, right? This is everybody has to trade and treat every trade differently. What I want from Bitcoin is going to be completely different from what you want from Bitcoin, what Paul wants from Bitcoin, what your cousin or your friend in the pub wants from Bitcoin, right? The reality is a lot of retail traders want Bitcoin at $1 million because they've got less than one Bitcoin, and they see it that, if they've put in 5 grand or 10 grand, ultimately it's a massive move, right? In the crypto channel last night, talked about moves, and I remember back in 2017, for example, I remember talking to my father, and one of the coins, I'd invested £500 worth of a coin called Linda coin. Linda's the name of my grandmother, and it just seemed a funny thing to do. £500, I punted nothing. Within 24 hours, I was going to meet my father over in Switzerland. We were off to a Christmas market. He was coming from the UK. I was driving over from France. And within this 24-hour period, I started explaining to him that, I've been buying some of these shit coins and doing this and doing that. And I was explaining that it was a lot like the penny stocks that I used to trade when I first started out. Anyway, showing him the screen, it had gone from, $500 to over £11,000. Sorry, £500 to £11,000, like literally within 24 hours, right? Now, the issue for me is a lot of people still see crypto as that type of opportunity, right? It's I can put in $100 and make 10 grand type of thing, right? However, the expectations are probably 10x that, 100x that, right? It's I want to put in $100 and I want to walk away with $1 million, right? So, composite man in an unregulated market, it's a free game to play in essence. Part of these shitcoins will follow until they die. Right now, this is where it gets a little bit more kind of complex and a bit more kind of technical. And in the grand scheme of things, where regulation could step in. Now, for me, one of the videos that I saw based on the SEC talking about the requirements for the BlackRock ETF and these other ETFs is a lot more around the regulation in crypto, kind of full stop, right? So, for example, if we don't see regulation change, we might not see the BlackRock kind of passing or passing the benchmark, the requirements for an approval of an ETF, right? Which obviously will be negative crypto. What will then happen is you're very likely to see regulation kind of ramp up because there'll be people like BlackRock kind of knocking on the door saying, I want to do this. Come on, let's do this. What do we need to do this? And they will end up being the sponsors for the regulation. The regulation then will come into play and come into force. And a lot of these shit coins that you see in, 800% return, you see in, a 100x return with leverage. The reality is a lot of these will be killed off. Like they will fall apart with, nothing sustaining them as a company. Right? They've got no real intrinsic value as a project, as a technology, etc., etc., etc. At the moment, these are poker chips, right? It's like going to Vegas and saying, let's just play on the casino, let's just play on the wheels, let's just go, bet on the fruit machines. It's nothing more than that. There's no kind of technical, there's no skill. As I said about my penny stocks, as I've said about the shit coins, back in 2017, I got lucky. There was nothing to do with skill. I've shared photos of, my friends saying, oh, I've just got involved in this project, stick some money in. And it was literally just take a punt, right? Now, the issue is as Bitcoin becomes more institutionalized, what we're going to see is less of that in terms of an opportunity, right? So when I keep saying things like, I'd rather make X percentage based on a steady return. If I bet on New Zealand rugby team playing against my local club, 9 times out of 10, New Zealand are going to win, right? Probably 99 times out of 100, maybe 999 out of 1,000, right? And possibly beyond. So the reality is, who am I going to bet on? I'm going to take 2-1 odds based on New Zealand winning, or I'm going to take 1,000 odds, 1,000-1 odds, or 10,000-1 odds with my local team winning. I'm just going to lose money, right? And I might be very lucky once to strike that rich, right? And then I'll give it all back to the market trying to do it again. It's exactly the example that I see in terms of where we are with crypto, right? So putting all this together, if we come back out, let me get rid of this now. This is the master level point, right? If we come back out of this and we look at this from a higher time frame, on a monthly time frame to start with, right? We massively in that overbought situation. We've pumped up on very little volume, right? Look at the volume in terms of this is supposedly the accumulation. What are we seeing in terms of the accumulation? Red, red, green, red, red, green, red, grey, right? So the reality is when you put this, again, that should be this, right? When you put this together, right? What is this trying to tell you? What are you, what are you seeing? What are you taking from this, right? Just take a second, right? Just to think of what you're actually seeing when you see this as a chart. Okay. So when you put all this together, there's a couple of things that are pretty much obvious, right? We're at this 1.236 extension. This isn't a move up right now. You could be saying, oh well, what if this is a 1 and this is a 2 and this is a 3 and this is a 4? Now I've explained this back last year. I think even one of the other YouTube guys with a lot of followers, he mentioned me in one of his videos, and I talked about this as a scenario, right? Because the reality is you can't pick and choose. Oh, I want my 1 to be here, and I think 2 is coming down because this looks like ugly. 2 to the left, 2 to the right. Now, I know some of you guys have asked me recently about, what do I mean by 2 to the left, 2 to the right. This is pretty straightforward, right? This is pretty basic stuff. If you go back 2 candles there to the left, right? 2 candles here to the right. What we're seeing, right? 2 there. What we're seeing is, regardless of the time frame, the first candle to the left has a lower high than this one. The next candle to the left has a lower high than this one. Over to the right, the next candle and the second candle both have lower highs than this one. How do I identify my high? There, right? Now, if, for example, you were to take a move that looks like this, and we assume that this candle was slightly higher, right? Well, the reality is 2 to the left will be this one, 2 to the right, this one, right? So at this particular stage, this becomes the high. Right? So it's only a way or a form of identifying. When you look at something like the gap fractal indicator that we've recently pushed out, right? I think that is only set to 1 candle, right? Or I think you've got the opportunity to set it to 1 candle, which basically means you could look at a fractal move high and a fractal move low, right? So just to kind of clarify that, just really quickly, right? If you were to come up fractally, this one would be a fractal move because you've got a high point prior, right? Then you come back up, you've got another fractal move there, and you've got a fractal move here, then another fractal move, then a fractal move, right? Now at the moment we've kind of carried on through. And this is only 1 left, 1 right, okay? So at the moment what you're looking for is this one has the highest high, right? So technically this would be the first one, right? Based on the 2. This one for me, and then follow through up here, right? So there's lots of different ways to read the same thing. The only thing I say and the only thing I look at is longer time frames, being 12 hours, 4 hours, daily, weekly, monthly. Is I like 2 to the left, 2 to the right. It just gives me a good swing point. If you were to put a zigzag type indicator on, you'd probably see that it would be like this is the low and this is the high, rather than stressing about the noise inside of this, right? So that's the first thing. So hopefully that's clarified for some of you. Now the next thing is, I've talked about COT data. I've talked about lots of other logic, right? As in where we are, kind of why we are where we are. You can stick things like your master pattern, right? You can stick things like the volume, right? Now, for example, right? Watch this as another thing. This is just me trying to give you some logic as to where we are. Right? I'm going to go from, let's do it twice, right? I'm going to go from swing low to swing high. So the first real move up, right, is although we've got this, I'm going to come, if this is a 1, right, 0, 1, down to 3, 4, 5, right? So what I want to do technically is swing from this level 2 up to this level high, right? This is the first things first, right? So we've got obviously a point of control. What I'm interested in is this volume here, right? Then we've got this large scale there, and then we got this large scale there, right? So these become like resistance points, right? These become levels of resistance kind of into there. I'm just going to put little marks on the center lines, right? Just to make it easy to visualize to the right. Actually, I'm going to drag that down a little bit more, right? Because I think the cluster is probably down a little bit more there. Okay, that's the real kind of value, the real point, right? So as you see the price rally, right, these were kind of created kind of bottom to top. If we do exactly the same thing now, top to bottom, right, we're going to get some ideas in terms of where the value lines are, where the value levels are, right? So we got almost zero volume in this area, and then we get this kind of slight bump sitting there. That bump obviously is the same as this bump over here, right? Which means we can easily stick on a level and say that's another level, another area of interest, right? Which is why, logically speaking, when myself or Paul mention things like 21, right? 21 is almost the logical pull for the price to come back to, right? Now, the way that I'm reading this is we've got a couple of things. I've said since the first move up, right, where we were in this reaccumulation, which was around this level here. If you look down on a weekly time frame or even the daily time frame, you'll see that I think I had something like 36,000 as the value area, right? So I'm going to put 36k on it to make sure this is a line like this all together, right? So 36k was roughly the value area overall. Right? That's the big area of interest. We've come now from where we've been down low, and we've gone through the first point. Right? Now I'm going to put this on a smaller time frame in a second. I'll just show you what kind of happened at this particular point. We've had no interest in this particular level, and we got zero interest above. We've got even less interest up and above that level, right? So if I change the color on these key points, I'm going to put this as red for lack of interest. I'll make it a bit thicker as well. We've got a lack of interest underneath that level, and then we've got obviously the drop off in volume practically at this level there, right? So there are a couple of key things to look out for, right? These are a couple of things that you can use your volume profile for, your volume tool for. We get rid of these just to make everything a bit easier to see now, right? So what we've gone and done is we've come through, right, the level of interest. Right? This is for me, this is probably the value area for composite man as a whole. Right? If I was to say where would be the preferred kind of buy-in choice, anything below that region, right? That for me is still pretty much true as it was back at 2021, 2020, whatever that was, right? So in essence, now we've come up to an area with lack of interest. Well, what do we see at the lack of interest? Well, we see a rejection. Now, in terms of a bullish move up, we've now rejected at the 1.236, which just happens to be an area of interest from before, with lack of volume from the move down. All I'm doing, guys, is building a story, right? So the reason that I wanted to share this is we've just had a move down from 45, right, to I think it was 40,300, and the move took something like 6 minutes, right? So I know 45 was obviously it come back down to 44 from the 45, but it's taken this much time to go up to this level, and we've dropped 5 grand in 5 minutes, right? That's how I'm reading this, right? That's maybe I'm wrong, maybe this is off to the moon, but I'm just trying to highlight. I'm trying to kind of point out how obvious some of these things are, right? This is part of the reason that I'm not bothered by a move that we've had up that's been hyperextended since this level. For me, this particular point here would have been textbook, right? If we'd had this move and this move would come back down into there, right? That to me would have been we were likely to see 100k type sooner, because I would have seen a move that done something like this. We might have had one little dart down in terms of a spring, and then we literally could have gone, up, out, and over, right? That to me would have been like sustainable. That would have been optimal. That would have been the option that I personally would have preferred. Right? The only thing we've done now is we've elongated this move. So instead of this being there, I still expect the same thing to happen price-wise, but I expect it to do something like this instead before we go back up there, right? Now, as I mentioned earlier, in terms of BlackRock regulation, ETFs and so on, there's a lot of reason as to why this could play out the way that it could play out. And I still haven't had a bullish case to counter argue why we only go up, right? A lot of people don't understand these things in terms of value areas. I've just tried to break down what a value area it is, or where the lack of interest is, what I would class as an auction site, an auction zone. Talked about the unsustainable volume. We've had a 4 to 5 grand drop in 5 minutes. None of these things are impulsive, right? What you'd really want in terms of an impulsive move is you'd want this move, right? And you'd want the volume to almost be following, right? As the volume bars come in, you'd want to see this in terms of the volume increasing, right? This is what you really want to see for this to be value in a move up, right? Let's come down to a weekly time frame, right? Now, obviously, you're going to want to see a step up in volume. What do we see? We actually see not so much the inverse. We see the first ramp up, and this is going back prior to the move, right? We've seen from the first move up, depleting volume. Next move, sideways volume. Yeah. Now you look at the next move up, depleting volume. Right? We've had one move here with an increase in volume, and if you look at the candles, they red, they red, they red, they red, they red, which means a lot of selling has been happening as the price is rallying up. Revert back to COT data, etc., etc., etc. Right? So, in the grand scheme of things, guys, right, what I'm trying to just emphasize and to highlight, right, is I haven't done a subscriber stream for a while. Right? There's not really that much to say that I haven't already said. I know Paul will agree with a lot of what I've said. He might have a different view on some of the numbers, but in the grand scheme of things, it'll be a similar message. We've tagged an extension on a kind of counter trend move for me. I think this is kind of down, which from down here we've said about this being potentially an A and this being a B. Now again, the B would have been optimal here for me because I don't think we need to go deep in terms of coming back down 15k. I really, really like a move down to this area, right? Now, if we are seeing a 3-3-5, because I don't think we go too deep, this kind of brings me back to we go kind of sideways, right? So this is the major issue for me in the grand scheme of things. We've got the monthly stochastic pointing now down. We've hit an extension level. This doesn't look impulsive up, which means it's counter trend. The signs are there, right? I mean, it's just not interesting, right? Now, just to finish with, the other thing for me, as I said right at the start, in terms of it's a personal choice and a personal thing for you guys, individually. I've been showing recently some of these moves, right? I've been showing some of these moves on a 1 minute time frame in the Musing channel. I've been showing them obviously in the prop firm traders, right? I've been showing these moves in terms of, let me just fly all the way back up to where the last couple were. Right, last week and the week before, some of these moves that we were expecting, some of these moves that I was kind of targeting, these were all on a 1 minute time frame, right? I think at some point I was even looking at a 15-second chart to take some of these things on, right? So absolutely, crazy in the grand scheme of things, right? But just kind of proving the point that they can be done. Now, when I talk about I'm less interested in Bitcoin, if you look at what I've talked about in the crypto, we come back to the crypto channel. So look at what I talked about last night in the crypto channel, right? And I put a few things, so let me put it into the notes. If I can copy the message from last night, or from late last night. I think we started the conversation. Where is this? This was actually a bit earlier than that. Okay. So I think it was around this particular point, right? So what I'm going to do, I'm going to put this in and I'm going to do the copy message link and I'll put this down to the very bottom, right? So if you go back through this particular chat I've actually gone and talked about, everything from what I see in terms of what I've just covered, why I think these levels could be capped, why, I'm not expecting an all-time high anytime soon. I then gone into a little bit more depth in terms of how I personally see this, right? Now, one of the things I wanted to share just to finish this video off is my goal for next year, for 2024, is to manage $2 million worth of funding through these prop firms, right? If you look at the numbers and the math, and I've talked about this on a per 100K basis, right? Because I know some of you guys have passed a 100K challenge, or 50K challenge, or 200K challenge in some instances, right? If you look at what you could be looking at in terms of making, if Bitcoin doubles from 20 to 40, and you've bought a single Bitcoin for 20 grand, you have exposure for 20 grand, $20,000 in Bitcoin on the hope that it goes to 40. So let's assume that that's taken a year. You've made 20 grand. Do you cash out? Have you cashed out? Why haven't you cashed out? Right? You've had a good return, good rally, good run. Cash out. Right? That's how I see this. In the last 10 days, last week and the week before, in terms of 10 trading days, I'd covered 23.5% on a minute time frame. Some of these trades were 3 minutes long. Right? 23%. Now you can do the math. 23% on a 100 grand account, right? And I manage a couple of accounts. It didn't take 10 days to make the equivalent of one full Bitcoin doubling. The only exposure that I had was the $2,000 that I'd paid for the accounts in the first place. And the beauty of it is, after passing the accounts, you get your money back, right? So in the grand scheme of things, there's no exposure, zero exposure. Even if all trades had gone against me and I'd lost both accounts, I'd zero risk on the table. What do you think is more beneficial? Trading Bitcoin and hoping that it doubles and doubles again over the next year, 18 months, 3 years, or taking some of these accounts, taking some of these challenges, growing the account and the allotment size for the assets under management, right, which is the AUM, and in essence managing more and more and more, taking similar trades. Right now, I've created a blueprint. I've shared that. I've put that out there in one of the streams. I'll share the text file again at some point. And I've talked about making 2 to 4% on a monthly basis. 2 to 4% obviously will give you a nice return per the end of the year, right? Let's just say 2% is 24% a year, right? On a 2% a month basis. 24% on a 100K account, 24 grand minus the fees, right? It's 20 grandish, right? Now double that account size to 200, double that account size again to 400, double that again to 800, right? Take that to 1.6 million, right? It's all doable. The reality is that's only on a 2% per month. In 10 days, I've covered 23.5. Why do you think I'm not interested in Bitcoin? These are the kinds of things, in terms of being a professional trader, these are the kinds of things that I want you guys to learn, to understand, to come back and ask the questions around these, right? Because you don't need to ignore Bitcoin, but you don't have the same interest when the same money is available with a fraction of the risk. And that's the point that I'm trying to get across time and time and time again, right? So just to finish with, in terms of this video, right? A couple of key points for me. I still don't feel like anything has changed grand scheme of things. We've ultimately ramped up on, fake news and so on here. Composite Man has taken the opportunity and said, thank you very much, I'm going to sell at the premium. We've tagged a higher level of the fib, right? So if we come back and we do, if I won't put a magnet on this one just for the sake of, if we come back and we look at the fib level in terms of an extension, we could come out here. Let's go back to the hive one first. We've got this one there, right? We got a couple of key levels that, from a clustering perspective, we basically finish. The reason that I like down here as textbook is, for me, this one here around the highs of 31, 31.5, whatever the cluster is, here, it actually tagged the 1.236 there from the smaller move, right? So on a personal basis, I would have loved that being, the top. back down, that would have given us a nice rally potential, a form for a rally, larger picture, right? At the moment, I'm seeing the only thing we've done by going up is pushed out the time further to the right that we need before we go back up, right? So I hope this makes a lot of sense. Any questions, obviously, feel free to ping. Guys, just get into a habit, right? Because I do get a lot of DMs. Get into the habit of posting just in the channels. The point is we want discussion. We want people kind of actively looking at. There's no real stupid questions unless you're going to ask me what I think of either a moving average or somebody else's analysis like Mooncar, right? Other than that, there's really no stupid questions. So in the grand scheme of things, right, regardless of what level you're at or what level you think you're at, right, we're all still learning, we're all still evolving, we're all still moving forward. If everybody has exposure to the same questions and the same problems, it might kind of tease out and encourage other questions to be posted, which is, the whole point of education. It's, kind of raise your hand and let's kind of throw these questions in the ring, yeah? Okay, anyway, enjoy the rest of the week and I'll see you on the next stream. Thanks for watching this, guys. Cheers all.